Hi there. In this clip, we are going to look at the basic of recording business transactions in financial accounting. So let's start with the accounting equation and the double entry system. You have seen the basic accounting equation, which is assets equals to liabilities plus equity. That is the basic. But we can also extend it further by breaking total assets into non-current assets plus current assets. Liabilities also, we can break it into non-current liabilities plus current liabilities. As for owner's equity, it equals to capital, the first thing that you invest in your business, either in cash or in kind items, plus revenue, minus expenses, minus drawings. That is the extended equation. Now, let's try to understand what is debit and what is credit. It's very simple. Debit is the left side of the equation. Anything on the left side of the equation will always be debit. So we are talking about the normal entry. As for the right side of the equation is what we call as credit. So whatever accounts that you have on the right side of the equation, the normal entry will always be credit, with exception for expenses and drawings, because the equation for total equity is capital plus profit, which is revenue minus expenses. And if there's any drawings by the owner, we will also have to minus it out. So all the components that you have to minus out will be considered as a contra account to your owner's equity. So these two accounts will be always credit. So if we were to open a T account, it's the same as what you are seeing here. Debit is the left side of the equation. Meanwhile, credit is the right side of the equation. So let's go through the next step, which is to record the business transaction after we understand the accounting equation and the concept of dual aspect, which is reflected in the double entry system. So the recording rule says here, if you want to record any business transaction, try to understand what will be the impact of recording those transactions on the account balances. If it increases, you just follow the normal entry. So we already covered and learned about normal entry just now. So if we follow means if it is earlier debit, we just debit the same account. The next thing, if the account balance will decrease, the rule is for you to do the opposite or contra of the normal entry for that particular account. Let's look at some examples. I have 3 business transactions that we are going to do the whole process starting from journal entry. Then we will post it to ledger. And then we're going to balance off all the accounts and finally prepare the trial balance. So let's look at the first transaction here. It tells you to record a transaction where the owner invests $5,000 in its business. So these are the steps that you have to go through one by one to understand how you end up with the journal entry. So first thing is identify the 2 accounts that will be involved in recording this transaction. Why 2? Can it be more than that? Yes, because that is the application of dual aspect concept. So the two accounts will be cash, 5,000. And then since this is investment, that's the clue telling you that you need capital account to record this transaction. Next step is you need to apply what you have learned about normal entry. And you know that your cash account, which is classified as an asset, always debit. And then your capital, which is on the right side of the equation, always credit. So what's the next step? The next step is for you to try to imagine what will be the impact of recording this transaction on these two accounts. So if you were to record the owner's investment, you can expect that the cash account will increase, and it goes the same with the capital account, which will also increase. So according to the rule here, if the account balances will increase, you just follow the normal entry. So the normal entry here will be reflected as your journal entry. So how are you going to record it? You're going to record it like this. Debit cash, 5,000, and credit capital, 5,000. So what's the next step? The next step is for you to post it to the relevant accounts. So we open up two accounts here, and you can see that first thing is the cash account. So according to the journal entry, it says here that we need to debit cash. So how and what do we need to do? Debit means the left side of the equation. So we go to the left side of the equation or the T account and write it down as the description and the amount. But we need to put the description as capital. Then only it will make sense. So done with the first posting, the next posting is for us to credit the capital account. So credit means the right side of the equation. So done. That's the whole process from journal entry to posting to the ledger for the first transaction. Let's look at the second transaction where the business owner buys inventory worth of 2,000, but it's on credit. So on credit means it's not yet paid. So it's a liability and we need to open accounts payable. So the other account, whenever you buy inventory, we need to open a purchase account, which is an expense type of element. So you need to remember that all expenses are always debit because it's on the right side, but a contra account to the equity. And then account payable is always credit because it's a liability and it's on the right side of the equation. So next, try to understand if you were to record this transaction, what will be the impact on those two accounts? It will increase the purchase account. It will also increase the account payable. So because of the rule that we have learned, any increment on the account balance will just follow the normal entry. So we copy exactly the same entry here. So how do you record it? We'll always start with debit. So we debit inventory, or in other way, we can, as I have introduced to you, we'll put it as purchase account. And then next is for us to credit account payable. So that's the first step, recording the journal entry. So the next step is to do the posting to the ledger. So how do we go about it? Just look at the journal entry. It says that we need to debit inventory account, which in this case is purchase account. So we go to the left side of the equation and write it down, the description and the amount of 2,000 as account payable. Next is we need to credit account payable. So we go to account payable, credit side means the right side, and put the description as purchase, amount of 2,000. Then, so let's look at the third transaction and see how we're going to apply what we have already learned throughout step-by-step process. So first, pays rent $500. So we need to look for clue. Pay means it will be involving cash account. Rent is an expense. And you know expense is always debit. Cash, which is asset, will always be debit as well. So the impact of recording this transaction, both accounts will be increasing. Sorry, only rent account will be increasing, but cash will be decreasing because you have to pay out to the landlord. So how do you record this transaction? Following the rule that we have learned, any increase, follow the normal entry. So what do? We follow the normal entry for the rent, but the one that decreases, which is the cash account, we have to contra the opposite, which is credit. So we're going to record it as credit cash and debit rent. And we're going to post it after you have recorded your journal entry to the ledger. So since the cash account we have already recorded in the first transaction, so this one will retain that. Do not change it because we are going to accumulate all the relevant transactions accordingly and close the account at the end of the period. So for this particular transaction, it says here that we need to debit rent expense. So go to the rent account and debit. Sorry, this is cash 0.5. Okay, and then go to the cash account and credit, which is the right side of the equation. Then next, we need to also know after we have done the journal entry and post to the ledger, the next thing is for you to balance off the account, meaning you close the relevant accounts. And since all the other accounts have only one transaction except for cash, so we are going to balance off this account. So what are the steps? First, look at both columns and find the total. The total which is higher will be recorded on both sides. So the difference between the total and the amount in that particular column is what we call as the balance, the closing balance. So you will need 4,500 to close the balance. So this is closing or balance of the accounts. What's next? After we have closed the account, we will be using trial balance to check whether whatever that we have done from the journal entry, posting, balancing of the accounts is actually correct. So how do we go about it? You just need to write the title and when do you perform this trial balance and list down all of your account balances that you have used for the period that have balances. So according to what we have done just now, the balance for cash account is 4,500 and it's on the right side. But if you were to open it back, it will be on the debit side. So this is what we call as debit balance. So you will put this 4,500 debit balance in your trial balance accordingly. As for the rest, we just put accordingly the balance, and we just need to total up all the columns and make sure that both sides are equal. If it is equal like what you are seeing here, then 99% chances that whatever that you have done from the beginning is correct. That's all, class. See you next clip.